Yeah, at this point, we like to argue it's just too little, too late. And by the way, the physical markets where there's not much speculation in, agree. They're trading $19 a barrel this morning. I think the key point is at this point, there's just not enough details to have a rational discussion about this. When we look at what we do know, as you indicated, the U.S. has thrown out the idea of 10 to 15 million barrels per day. The Saudis responded by saying that they're willing to call an emergency meeting about a cut, and they've thrown out the idea they're willing to cut down to 9 million barrels per day. That'd be roughly 3 out of Saudi if others are willing to agree. Now, the problem is that the Russians stated earlier that they have not had any discussions, meaning President Putin has not had any discussions with the Crown Prince, which tells you that this is not a three-way discussion. Now, let's go back to your core point about the U.S. The U.S. has got their hands tied by antitrust laws. The Texas Railroad Commission was granted an exemption in 1933 during the New Deal, which is why the Texas Railroad Commission has reached out to Russia, but not Saudi Arabia in these discussions. So your question about whether or not the U.S. can add to this, the president has said no due to antitrust laws. However, the Texas Railroad Commission has reached out. So there is not a lot that they can do. But obviously, as you point out, they need to throw something into this potential cut to make it work. But I think the final point here is these producers are going to cut regardless. There is a tsunami of oil reaching the global markets right now. I like to emphasize the global demand is likely down somewhere around 26 million barrels per day right now, because at this point, as of yesterday morning, 97% of global GDP is impacted by some type of social distancing measure. And think about this. Oil actually creates social contact and creates globalization, the two things we're trying to restrict. So I think the key point here is necessary versus voluntary cuts. These guys are going to cut. So we would view, hey, lots more downside risk in prices, because what's going to make them necessarily cut? Basically the surplus is overwhelming the infrastructure. You can't deliver another barrel of oil into the market. Prices collapse. And again, where is cash Brent trading today? $19 a barrel.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.